Good morning, it's Jonathan Barratt with the morning debrief for the 28th of May 2010. The current time is 8:14. Lots of action last night, and obviously a lot more action will happen over the next couple of days. I guess the major features last night was China. China basically turned around and said that they would not revisit the investments they've got in Europe. As a result of that, basically the European equity markets took off, and the US markets took off on the back of that. We also had the tremendous rally in crude oil, which is quite nice because we are long crude. And as a result of, there could be a combination of a few things. Obama's speak concerning the deep drilling programs in America and the Gulf, the hurricane season, summer drive time, or just supply demand, or just more demand, as what we sort of suggested, I guess, sort of the last couple of days. Okay, so there's quite a lot to talk about, so let's jump into it, and let's have a look at what Bloomberg's all about. And if we start off in Europe, and you can get a sense as to how bullish things were, that rally from the China commitment to European investments was quite supportive. The Stoic was up 3.52%, the FTSE was up 3.12%, and the DAX and the CAC both up 3.1 and 3.42 respective. So very positive on that front. As a result of that, we did see America trade up. The Dow closed up 284 points at 10,258. The S&P was up 35, the Nasdaq up 81, and the Russell was up 27 points, so quite positive there. Russell up there 4.34%. The local market also very solid, as you'd probably expect. The local market closed up pretty much 65 points, and quite solid there at 4,448, and we'll expect those gains to continue. Okay, let's just have a look at some of the markets, particularly the currencies, and quite happy with what's been happening. We took a view a while ago or during the week in terms of the bullish nature of what's happening, and that's certainly holding true today, which is great. Dollar index, I guess, is the key here. As you can see, we've taken off from that 87 level, so many are starting to feel that is a double top up the top there, and the US dollar will continue to weaken. As a result of that, that should support commodities. Have a look at the Aussie battler. Had a huge night last night. Aussie 85.05, very strong, and I think when you look at that, very strong move. 84 dips back to 84 can be looked at, but I think we can conclude that Aussie has found an intermediate low. Euro 123.55, quite supportive there. Hasn't quite moved as much as the Aussie, still within a bit of a range. Let's have a look at that hourly chart. But as you can see there, a nice solid bounce. A breakthrough 124.20 has to be encouraged for a move higher. That's on the currencies. Let's have a look at some of the commodities. I think the crude's the best one. Look at that move, solid move there, 74.83 for the day. And that's 3 solid days of gains. We went long a couple of days ago. I'm quite happy with the returns on that. Expectations still remain supportive for the price of crude. And as you can see, in my mind, that confirms that low in place. Here you can see here, good stochastics looking good. Dips, I think, can be well supported. And I think we trade up through US $80 a barrel. So like that indeed. Having a look at copper as well. Copper very strong, looking quite good as well. Just coming up there. I'd actually see the copper as one of the cheapest of the two, and as you can see there, we've got some good divergence here, and that's why we went long copper the other day. Our stop is below here, but I see that back up to 330, 340, so looking good there. So of the commodities, all looking quite good, and I'm encouraged and should see things trade higher. How would this affect our local market? And I think that's the result there. I think we've got an intermediate low in place. Good divergence there, so I'd suggest prices to go higher. So quite supportive across the board. On the economic calendar, today, let's walk on it. We've got money supply, M3 in New Zealand. Most important ones, I think, you'd have to say personal income in the States, personal spending, Chicago Purchasers Managers Index, and Baker Hughes rig count. So not a lot of data, but just enough. And I think the expectations for that would be that the data will continue to show there's a broad-based recovery in the States, and that should aid and support some of the commodities. Something we've been discussing, which is worth mentioning, is that we feel that given the focus has been on Europe, that the market is failing to support those economies, or the prices are failing to support those commodities which are actually moving. The lights of Asia still very strong, the lights of America coming out and looking strong. As a result of the fact that people are moving away and expecting things to come under pressure, that could actually create a little bit of a hole, which could see some of our commodities spike quite dramatically. But anyway, that's for another day. Let's see how we all trade. Hope you have a good trading day, and we'll certainly talk to you, try and talk to you tomorrow.